Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is January 4th, 2012, and I would first like to begin by saying Happy New Year to everyone watching this video. I hope 2012 becomes a profitable year of trading for you and that you will learn all that you need to know in order to be successful in the Forex market. So that is my hope for you this year. So then we can begin our technical analysis review by looking at our chart. Right now we're staring at the 15-minute chart. And as you can see, we see this whipsaw activity where on yesterday we had this rally in the pair. But of course today we saw strong selling in the pair. And most of the gains acquired from yesterday we ended up losing on today. And of course there's a reason for it. But as you know right now, the mood for today was primarily bearish, and there was massive selling for the day and a massive flight to safety and dollar strength for the day. And this came as investors became worried over whether or not some of the countries would be able to roll over or finance some of their debt during the first quarter of this year. So then this was what drove the market lower. And there was also some fears of a potential downgrade for some of the countries in Europe and just concerns over credit issues with the banks in general. So then we see this risk aversion, this risk off mood for today, and that's why we saw this slide in the pair. Now, if you glance back late Asian session where my cursor is around this area, prior to the London Open, we can see that price rallied and attempted to test this 3070 zone or this 3072 resistance area. And it could not break through this area, failed to break through this area. And if you look back in history on our chart, during yesterday's New York trading session, price attempted to do the same thing. It attempted to test this 3072 zone resistance area, but it failed to break through, and we saw this sliding, in the pair. So then from here, we know that this is a strong area of resistance and would have been a good place to set up a short order or sell the Euro US dollar pair. Now, to further confirm this as an area of resistance, I'm about to go to my 1-hour chart and show you that this area of 3070, this 3070 zone, was also a prior area of consolidation for the pair during late December. We see it was sideways trending, it was ranging tightly, and this was a strong area of consolidation. And once price broke this consolidation pattern, we saw strong selling in the pair. We can see the momentum with these large candlesticks on our 1-minute chart, which proves to us that this is a strong area of supply and that there's a lot of sell orders at this level. So then, of course, coming to today, this would have been a good place to go short because we would have known that there was a lot of sell orders positioned at this resistance at 3072 or this resistance at the 3070 zone. But let me go to my 5-minute chart. So then, of course, at this time, it was like right around the London opening or the London trading session. You can see that our 5-minute stochastic was overbought and it was preparing to cycle downward, which would have also confirmed that this would have been a good time to actually short the pair and sell the Euro US dollar pair. So if you would have entered at this 3072 zone, you could have traded this pair and held on to it and closed out or took your profit at our daily pivot at 3019 for about a 50 pip trade. Or you could have been a little risky and held on to your trade and closed it out at this ascending trend line support at 29.69 for a 100 pip trade. So that would have been 2 trades you could have entered. You could have closed out here at our daily pivot for a 50 pip trade, or you could have closed the trade out here at the ascending trend line support for about a 100 pip trade. Now let me go to the 30-minute chart just to show you where I got this ascending trend line support from. And I drew this line from our December low, our new low from last year at 28.58 to our low on January 2nd. So this formed the ascending trend line, and it served well as support for today for the pair. So then, of course, after this, it pulled back higher and it began to fall even more throughout the day. Now, if you were looking for if you was looking for another opportunity to actually short this pair, sorry, after the New York opening, you could have done it actually right after the release of the factory orders report around 10 a.m. Eastern or 9 a.m. Central Standard Time, which is my time in the Midwest. But right here at this level, you can see that this was our S1 level from our pivot point calculation at 29.61, and of course it was prior support, but it's now our resistance. So we could have entered a short order or a sell order for the euro US dollar pair at this level at 29.61, and you could have actually closed this trade out near the psychological support at 2900. So then that would have been about a 60 pip trade right there if you wanted to place a trade and re-enter the market right after the New York Open. So of course, that's as low as it got today, this 2900 level, and from here it bounced off this support and began to retrace higher, and right now you can see that price is sideways trending, or it's consolidating within a tight range, waiting for the Asian Open. And of course there's still room for it to move higher, or it can move lower. Of course, we will wait and see what the Asian Open gives us. But that's it for our technical analysis review for today. If you can join us for tomorrow's webinar, which would be at 9 a.m. Central Standard Time, 10 a.m. Eastern. We will have our next VIP live trading webinar where we will discuss the price action for the euro US dollar pair, as well as place a few trades in the market. So if you can join us, I'll encourage you to please sign up and join us at one of the links below. But if not, then I wish you a profitable trading day on tomorrow, and I will be talking to you later. Have a good day.